Welcome back to Yuri's Box. In this video, I'm going to talk about cryptocurrencies, bear market, or correction. If you like this kind of content, consider leaving a like. And as usual, nothing in this video is financial advice. So, whenever I talk about cryptocurrencies in general, it's important to make a distinction between Bitcoin and cryptocurrencies, okay? Bitcoin is in a league of its own. It is, in effect, probably one of the, if not really the only, completely decentralized cryptocurrencies. Ethereum is, um, you know, on a similar path, although not equal. All of the rest, which can basically summarize as the altcoin market, as far as I'm concerned, has nothing to do with Bitcoin. And really, any significant move to the upside for altcoins in general, if you look back at history, usually comes on the back of QE. Whenever you have QE, you see altcoins perform quite strong. Whenever you have rates going up, whenever you have QT coming in action, that is when you see altcoins suffer. That isn't necessarily true for Bitcoin. For example, just by looking at, post 2022, we've had QT, we've had rising rates, but that hasn't stopped Bitcoin from going on a massive tear. One possible explanation, as many other people have pointed out many times before I have in this video, is that potentially when you have QT, you have kind of the run to safety, to relative safety rather, where you have people rushing towards the safest part of the asset. So for cryptocurrencies, that would be Bitcoin. And in essence, that is what you've seen and ever since the bear market in 2022. Ethereum has underperformed Bitcoin. The altcoin market has underperformed Bitcoin. Okay. Now, as far as I'm concerned, I'm not so interested in the altcoin market, because as long as this regime is in play, you're really just taking on more risk for significant less reward. Because at this point, the only way altcoins are going up is if Bitcoin is going up. Okay. I'm on the same side as Benjamin Cowan on this. I appreciate his videos a lot, and again, it doesn't make sense to consider altcoins at this part of the market. If we get QE, whenever we get QE, because I'm definitely of the idea that sooner or later QE will return, then altcoins will have their time to shine. But I honestly don't think that time is right now. The only thing that is worthwhile considering at this point is Bitcoin, as far as the cryptocurrency space is concerned. Now, we've had kind of a scary month and a half, really, ever since the end of January, with this 30% decline. Now, before I move any further, if you're in the cryptocurrency space and you get scared by a 30% decline, that is honestly like, eating fast food for 6 months and being surprised at the end of the 6 month tenure that your cholesterol is high. I mean, what are you expecting exactly? If you're in the cryptocurrency space, what you're getting is volatility. You're getting it on the way up and you're getting it on the way down. Okay, so that is kind of the ground rules, really. That's what you're signing up for. You're signing up for massive volatility. Okay, and that's important to keep in mind, because that leads me to my next point. There are really two ways you can look at the market as far as Bitcoin is concerned right now. And that is really the optimistic view and the bearish view. And I'm going to take an exam, really two kinds of cycles. So I'm going to look at the 2017 cycle. I'll try to be as quick as possible. And the 2019 cycle. Okay, so the first thing I'd like to look at is the 2017 cycle. And I'll be very brief. The bull case is very simple. Like this 2017 cycle, we had brutal corrections. Many times we had 40% correction in July of 2017. We had another 40% correction in, when was this, September of 2017? Yeah. We had another one before the parabolic run, the final parabolic run. Again, another 30%. So I think the bull case is that this is anything different. You know, and no matter how hard I squiggle on these charts, it is what it is. And by that I mean it's a bull market, and it'll keep on going, and you'll have these massive swings to the downside, which will scare a lot of people off. And really, it's just a matter of waiting out the volatility, you know, taking it on the chin, but ignoring the charts and just holding Bitcoin. Okay, we could very well be in that kind of an environment. Now, I have my own bias, which is that we're in a slowdown. That doesn't mean that we're in the end of the world, but I definitely do believe that we're in a slowing of the economy, which leaves the economy vulnerable to shocks. We have certain things acting against the economy, mainly tariff saber rattling. You have the beginning or the willingness to undergo a cycle of fiscal tightening from the current administration, and you have some shenanigans going in, like the yen carry trade. Okay, as long as those factors continue to play themselves out, it does leave room for the bearish view of things. And for the bearish side, I look back to 2019. And the reason why is that the move we've seen so far is quite literally the carbon copy of 2019, with a few key differences which I'll point out. Ever since the bear market in 2018, from the lows, we saw about a 350% rally. Okay. From the 2022 lows to this first local top in March, we saw about, again, a 370, 380% rally. Not too dissimilar from what we saw in 2019. What followed that rally in 2019 was a slightly, a sideways to slightly low price action, which eventually resulted in a breakout. Okay, so we had right here decline of about 55%. Right here in 2024, from the peak to the low, we had a 34%. Again, this is one of the differences I was talking about before. But most importantly, after that, we had a rally to kind of really a breakout. Okay. Now, this breakout was about a 60% move. Okay. From just before really the pandemic. So from till February of 2020. Now, the interesting thing about what we saw about this rally after the slightly downwards price action we saw after the March local top is if you measure from the low that was put in during the August growth scare up until the top, we are about 120%, not really, around the 120% rally, which in essence really is double what we saw in 2019's rally. Now, to me, that is interesting because if I had to, dubiously speculate, if we're, citing the master here, if we're quoting the master, I would argue that that is precisely the move we would have seen in 2019 hadn't we had the pandemic kind of cut the legs off of the rally that we saw in the end of 2019 and the beginning of 2020. The pandemic comes in and it just kind of pulls the rug underneath Bitcoin, which could have had a much larger rally. After that, we have a decline induced by the pandemic. So let's say a resolution to growth, some kind of a landing, which brought a 65% decline. Now, a couple of things about this. We definitely don't have a pandemic, and I hope we don't have a pandemic in the near future. However, if you keep on seeing things like tariff saber rattling, if you continue seeing fiscal tightening and other things continue to exert pressure on risk assets, you have to at least consider the bear case. Now, I'm not saying that we're going necessarily, having a resolution like we had in 2020, but we're at a point in the economy where things like the unemployment rate, if certain mechanics keep on, exerting pressure, could easily push the unemployment rate higher. And given the fact that we have the Fed, which is reactive in nature, likely to be late, likely to cut rates too late, what that would bring me to say, if I had to, again, with all my biases, I've, laid them out clearly, it's to say that potentially, if we were to get some kind of a resolution on growth, like we had, a recession because of the pandemic, if we get it because of, just a cycle, getting cut short because of, again, tariffs, layoffs, and so on, so forth, you could see this sort of decline here, and possibly something a little bit worse, given the fact that the response to this decline was immediate. So when that occurred, you had rates cut to zero immediately, and you had one of the largest asset purchase programs in history. So that really put a floor on risk assets. Given that the bias right now is towards prioritizing the fight against inflation, I wouldn't be so confident that the response would be so immediate compared to the pandemic era. Now, again, the only way you see something like that, like this kind of a resolution we saw in 2020, is again if the slowdown develops into something a little bit more, a little bit worse. Okay, if you get some kind of a landing, be it a soft or a hard landing, given the fact that we came into the year really expecting all of the best and none of the rest, really, not pricing in any of the bad news, especially when you think about the new administration's policy, what we were expecting, for example, with that was tax cuts, deregulation, and then tariffs. What we got is exactly the opposite. Or really, we just got tariffs no tax policy, no tax cuts, no deregulation. We are about a month and a half into the new administration's, since the new administration took office, and all we've seen really is tariff talk and tariff saber rattling. We are still yet to see anything really stimulative. And again, as I've said in many of my previous videos, this could very well be, the bullish case that I outlined even, at the beginning of the video. And I kept it short on purpose because, many times the best thing to do is nothing. It's the worst feeling in the world not to do anything, because you see a lot of things swinging around and you feel like everything is about to collapse. But like 2017 shows, whenever Bitcoin is on a run, you really have no business doubting it. And again, even like, this latest run showed after 2022, if you doubted Bitcoin, you were wrong. And so it could very well be that the right call is just to relax, have a beer, and wait this out. The reason why you have some credence to, you have to give some credence to the bear case, I think, is because of really what the new administration is enacting. A lot of fiscal spending was the cause of a lot of the economy really looking a bit a little bit better than it probably really is. And again, we'll just have to see whether these things that are getting enacted, tariff saber rattling, and some form of fiscal tightening. Again, we're not talking about anything massive, but the fact that you already see the willingness to freeze government hirings, the fact that you already started seeing at least some government layoffs, is an indication of where the administration wants things to go. Okay. And so will that lead to a landing? I have absolutely no idea. Really, only time will tell. And I'll leave the decision up to you. Again, it's really up to you really to decide how are you interpreting where we are. If you're interpreting, that we are that the economy is doing fine and that the unemployment rate might go up a little bit, but that's nothing to worry about, then it's the 2017 case. It's just a matter of taking it on the chin, don't panic, and use any decline to possibly add more. But on the other hand, you think and you see that these all these factors I laid out in this video and previous videos are having and could have a negative effect on the economy, causing possibly QE to return and rate cuts to come back for the wrong reasons. Well, then I would look at 2019 for like the blueprint for what is to come. Because again, if you look at it, it is really, really similar, in my opinion, to what we've seen today. Massive run-up, slightly downwards action, then a breakout, or rather right here, a breakout, and then some kind of resolution, some kind of a landing. Does it have to happen? Absolutely not. And again, no matter how much I squiggle on charts, that won't change anything. Squiggly charts won't stop Bitcoin, that's for sure. So really, that's really my two. Those are really my 2 cents on where Bitcoin is headed. And really, when I talk about crypto, I make an extra effort to divide Bitcoin from all the rest, because again, Bitcoin is in a league of its own, really, and it has no business being compared to altcoins. Okay, so again, if the economy holds, then it's just a matter of stomaching the volatility, like say 2017, where you had many 30 to 40% declines, which were brutal. In the meantime, I'm sure they were brutal, and many people calling for the end, but which at the end led you to an incredible rally, okay, a parabolic rally. But if the economy doesn't hold up as well as people came into the year thinking it would hold, well, then you have to consider, I think, the 2019 kind of blueprint where you have, again, everything is kind of replicating, and again, a much larger scale, a stretched out scale, a stretched out version of 2019, but still, it's fairly similar in my opinion. So again, I'll leave it at that, and time will tell where things are headed. If you like this kind of content, consider leaving a like, and I'll see you next time. Bye.